Welcome and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. In this show, we cover a broad range of topics that cater to commercial real estate newcomers and industry leaders alike. I'm your host, Yannis Papadakis, Business Development Manager at Crexi on our auction platform. And today we are thrilled to sit down with Darpan Patel. A little bit about our guest. Darpan Patel joined Marcus Millichap as an associate in April of 2012. He was promoted to senior associate in April of 2016 and elevated to first vice president investments in July of 2019 and senior vice president in May of 2023. Congratulations. Since joining Marcus and Millichap, Darpan has closed more than 350 transactions, equating to more than $725 million worth of property sales in 40 states. His clients include developers, high net worth investors, syndicators, medical professionals, private equity funds, and private investment groups. Mr. Patel and his partner, Mr. Yozwiak, joined together in 2020 to form the Patel-Yozwiak Group of Marcus Millichap. They lead a team of professional consultants that provide advisory services across the entire net lease sector. They have breadth and depth of experience in retail, restaurant, office, industrial, medical, and hospitality. The team has closed in excess of 650 transactions valued in excess of $1.4 billion across 40 states. Darpan graduated from the University of Cincinnati with a Bachelor of Business Administration with a focus in finance and investments. He is a member of the International Council of Shopping Centers, and in 2020, he received the ICSC Certified Retail Real Estate Professional, CRRP designation, awarded to those with a high level of industry fluency. The Patel-Yozwiak Group is quite active in supporting charitable and nonprofit organizations, including Feeding America, Cincinnati Center for Autism, Cystic Fibrosis Foundation, the Point Arc, St. Jude's, Feeding Tampa Bay, and numerous other organizations. Darpan, welcome to the podcast.
Thank you, and thank you for that extensive rundown. I guess we're all done here.
That's it. We're done.
Thank you.
But even though we covered so much already, I would love to briefly learn more about your career path and lessons learned along the way. Can you tell us more about where you're from and how you got your start in commercial real estate?
Yeah, so initially born and raised in New York, ended up in Cincinnati. Our family had opportunities in starting a business. My father went to the Midwest. I grew up and obviously went to UC. Getting to this point and starting into commercial real estate, initially I got my degree from UC for finance. I loved stocks, options, and things of that nature, but also saw myself as not being in the gas station for the rest of my life or behind the counter. I've seen how hard my parents worked. They were immigrants here and the life that they helped create. So, that head start that they gave me, I got into banking right after school, realized, within a couple years, it just wasn't for me long term. Mentally, spiritually, emotionally, etc. The income was great. 22 days off a year is fantastic. But I saw more opportunity for myself. So I quit. I quit the perfect quintessential, start out of school, get a salary and benefits job, and didn't know what I was going to do. I switched my LinkedIn sector resume portion to real estate. And I got a couple calls, one of them being the operations manager at Marcus Millichap in Cincinnati. We are still friends to this day. She's still with the firm, and I thank her every day for picking up the phone and calling me and bringing me in for an interview.
Amazing. And I'd love to know a little bit about some of your mentors and how they shaped your career path, early or later on in your career.
Yeah, so I was actively seeking out mentorship in my next step, which I think is why Marcus Millichap was a great fit. I had met my mentor at the time, who became a business partner with me, Joel, who helped me learn really the nitty-gritty of the business. I had great managers throughout my careers. Michael Glass has been a mentor. He's really high up executive, along with Ryan Nee, who runs the Sun Belt with us. Ryan Sarbanoff, David Bradley, Colby, Joel, a lot of these executives and agents in the business have helped me at the right steps across my career, just to constantly push and know what the next levels are and not, rest on the last success. So that's been really fun to have different perspectives from a wide variety of experienced people, but also to know that they wanted to see the success or saw something in you that you didn't even see in yourself. So it's kind of why, I've transitioned into obviously brokerage, but being a mentor to a lot of agents across my career and interns and things like that. So it's a little bit of pay it forward in the business for me.
So I'd love to learn what some, early lessons that became invaluable going forward, or even any favorite mistakes or moments that course corrected you in your career path.
Yeah, I think early on in my career, I had to learn how to listen more from an advisory perspective, understand what the client's goals were to better assist them over their ownership of a property. But it was really becoming an advisor, right? Everyone who comes in wants to get to the paycheck, things of that nature. From my perspective, it was better to become that advisor, learn from my clients, and I picked up a lot more about the real estate business just by asking questions to my clients rather than having my own agenda. It's really focusing on their business plan. I was taught early on, learn 100 business plans and you might last in this business. And that was really learning 100 BOVs, 100 client goals. The mistakes were usually when I was trying to push my agenda, right? Achieving my goal of a listing or a BOV or something of that nature. So the moment I shifted my mentality, and it took a lot of time, it's not something you can do just immediately. It helped me grow into a better advisor. Today, we advise nearly 100 clients a year on a regular basis through the team. So we have a lot of different personalities and perspectives that we have to cater to.
Awesome. Yeah. I mean, it sounds simple, but it's hard to implement sometimes. Is listening first, and I know when you become a true advisor and you're putting your clients first, then that lasts, right? That's a client that's happy to give you a referral and tell their friends, hey, Darpan helped me and he did a great job, and maybe selling wasn't the right answer at first, but it ends up being the right answer later, and you're trusted with that decision because you're a trusted advisor. Darpan, what are some fundamental tenets of your work ethic that you maintain today?
I think my entire life growing up, I've seen what hard work is. And my entire life, I've usually been around somebody that owned their own business. It's a community thing within our culture and our businesses of everyone I've grown up around, whether it was C-stores, gas stations, hospitality. It's always been a 24/7, business for a lot of people that I grew up around and I still consult with. So what I love about real estate is that it is 7 days a week. The market, might not be closing on Saturdays or Sundays, but I'm able to drive the market. It is the world that is around me. So to me, it's not really work anymore, but it is getting up early. I had to learn early in my career that, waking up at 8 o'clock, you were late. It took a lot of years to learn that, my dad was probably right. 5:30, 6:30 in the morning is the right time. And I think that was a big life changer for me. After making the move to Florida, it's much easier in the mornings to rise and shine. But we have pushed, our entire team has joined along with it. And I think it's a beautiful thing that we're all rushing because we love what we get to do every day, what we get to wake up for. This is the life that we've decided to create. So the work ethic side of it, it's a little bit natural. I've grown up in gas stations and stuff like that, spending a lot of time behind the counter to hang out with family and friends. It's kind of where we, broke bread. So today it's a little different. I bring my kids into this office. We have 10, 15 people here. It's a different C-store, but it's the same work ethic, right? Early to rise, working weekends, being responsive, it really builds into that. We have a high integrity standard. If the deal doesn't make sense, it might not make us $1, but we have to say that out loud to our clients just to get that a little bit off our conscience. It's probably not the right time to sell the majority of the times, and that's okay. Maybe it's a refi, maybe it's something else. So really focusing on the client, that's a tenet of our organization, of me personally, from the things that I've learned early on in my career, and then really having resilience, right? What happens when you get punched in the mouth? Do you get back up? Do you go switch firms? Do you switch sectors? Early on, I wanted to look left and right. I tried to find a way out of this business, but really it was quitting to me internally, and I decided not to quit. And I'm, this 35-year-old is grateful that 25-year-old did not quit.
All right, now jumping around a bit, let's talk about the Patel-Yozwiak Group and what your team is seeing in the market today. First off, tell us a little bit more about you and your team. Or sorry, okay. Can we drop that that little the little box? Oh, perfect. Awesome. All right. All right. Starting again. Jumping around a bit, let's talk about the Patel-Yozwiak Group and what your team is seeing in the market today. First, tell us more about why you started your team.
Um, it, I don't know if there was an initial why behind it. It kind of happened organically. And not many people might know this, but I had my own separate team. Dan had his own separate team, and we were relatively competing in the market. We were very friendly, and we were friends before this business in the merger. But as I was moving, I wanted to continuously grow our team. I needed a running partner. And as I was transitioning my team into a little bit more remote, heading into 2020, as I was moving, Dan and I had a handshake deal, and we worked a few clients together remotely in 2020, and it worked as a business partner, along with Sam on my team, who is one of my closest friends, who runs the entire operations and support. I really get to work with my friends and bring on agents that we can build that culture with. And it's much easier to go through the trenches with somebody else that knows what you're going through. So, but we also had a similar business model, single tenant, retail, Midwest. So we were working buyers and sellers together. And then the first client that we worked together was a client we both went after, who was never going to list with us separately, but he decided to list with us together. It was our second deal ever sold as a team in 2020. So I'm very grateful that for being able to do that during that time. So less of a why, but more of a how, in the sense of how it all kind of came together. And through the COVID shutdowns and the remote work, we accelerated through those challenges and built a system. So maybe that's more of the why. I wanted a system. I wanted the ability to grow into supporting bigger level clients, focusing on developers, helping our 1031 clients kind of meet that middle to do deals together. And the niche that we found in the marketplace seemed underserved. It's private clients, even first-time buyers that we're building portfolios with.
Excellent. Well, thanks for breaking that down. And I'd love to understand, what sets you apart from other advisors in the net lease space? Is it focusing specifically on development deals, quality of service? What is it?
I think that what sets us apart is our platform. As a net lease core specialization that I built my business on, specifically developer product and bridging the 1031 capital, my advisory focus is to educate the buyer pool into the product, the yield, the financing, and the full vendor stack. And usually that's where our clients are coming from, maybe an apartment in California or New York or something. And they're very good at that, but a triple net lease or a single tenant credit deal, it requires a little bit of nuanced education. So I found myself getting better at it as an advisor when I was able to educate clients. Now, a lot of other brokers might say that's a lot of time invested. It is. The dollar per hour can be slim, but the benefit of the relationship to us was the long term. So we're able to advise our clients throughout the ownership aspect of it, and it's annual updates to the existing investor that we have worked with. The developer side of it, I'm involved with assets pre-acquisition of land, because we have the statistical data, we have the negotiating know-how on how these leases should be structured, so we can help our clients save a little bit or make a little bit or iron out certain parameters in their new construction that makes it profitable on the exit. And it's more important now than any time in the last, I would say, 10 years, because interest rates are higher than our developers might have priced their build cap. That might be a little too technical right now, but if you can sell at a higher cap rate than you're building for, you're losing money, and you can't sustain a retail development business that way. So it's very difficult and nuanced in the marketplace to price 2 years early. So our data-driven approach, we are on the forefront of even subscribing to Crexi. I don't know if you have a count of the first however many customers, but I remember the moment I saw it, I did sign on to add a marketing layer to our business. So we're with other services, AI and things of that nature. We want to be ahead of that curve I don't anticipate brokerage to be replaced by AI. I think it will be an enhancement. So we're capturing that, and it's benefiting our clients in compressed timelines, better pricing for sellers in today's markets, and better pricing for buyers when we're negotiating on their behalf, because we have a lot of relationships in the marketplace today that we have brokered with over and over the last decade, and some great brokers that we love to work with because they set our standard higher.
Fantastic. I'd like to know, what tactical decisions did you make early on in your firm's existence do you think most contributed to your current success?
I would say multiple compounding decisions. 8 years ago, I hired Sam on my team, who's one of my closest friends. That has allowed me to think much bigger. It really was 1 + 1 = 3. We were able to support more agents, more clients, build a bigger business. The second decision to that was partnering with Dan. Really leaning into the platform, and the training within the company has been an underlying method. All of our agents are bought in. We used to say Kool-Aid when we were trying to sell them on something. It's not really selling them on something. The platform is proven, 50 plus years, public company. We're able to win business in markets that are challenging rather than easier markets when everyone can win business. So that's what we pride ourselves on moving forward.
And what is your high-level view of the net lease sector today? How has net lease evolved and changed in the last 5 years?
For such a big marketplace, it's so small that from a private client transactional perspective, we run into a lot of the same brokers on a regular basis across the country. So the relationships matter. The developer relationships matter. The buyer relationships matter. The reputation matters across the net lease sector. But it's also so big from a perspective that there's tons of sectors that weren't there 5 years ago on a national stage where today they are. Cannabis, drugstores 5 years ago were a phenomenal investment to ride through an economic or a volatile environment. Today's world's a little, different for the drugstore space. We're still actively transacting that, but there's higher volume on the marketplace, higher supply, lower demand, lower 1031 capital. So it's net lease space, for being just singularized as one space, it's so nuanced. There's a lot of green shoots in certain restaurant categories that are uptrending, but a lot of red flags in concepts that might be facing bankruptcy as margins shrink and things of that nature. So you really need to be working with specialists in the market, or people that know who to contact in a certain specialization to thrive in a changing market. It's no longer slap a cap rate on it and see 10 buyers from Crexi show up and pay full price. I wish it was like that. I miss that. But this is where I believe brokerage matters.
Yeah, absolutely. So what separates Tampa Bay and West Florida from other markets? And could you also talk about some of the other markets you specialize in?
Yeah, so Tampa Bay and West and Central Florida in general, I think the news is out there. It's easy every day. It's on a list of the best places of the best places of the best places. So yes, sunshine, water, lifestyle, no income tax state. Those are the knowns. But really, when you're here, even with the cost of everything increasing the last few years, last 5 years or so, it's still a relatively affordable marketplace to raise a family, to live long term. And the freedoms enjoyed here, the access to the water, like I said, the amenities, it's parallel to some major markets, right? Like Orlando obviously is global. We have the entertainment, the capital, aspect of their businesses there. But Tampa, I think, is a little bit underrated. It was for me when I was looking around the country, and net lease has allowed me to look at a lot of national marketplaces, right? So with the Midwest that we operate in, I think Columbus is a fantastic market. It's underrated. It's up and coming, but the catalysts there are big. Intel, but also Ohio State, the growth there. We love the Sun Belt in general, but we love outskirts of Atlanta. We like Macon, some of these markets. So we're coaching up our clients into where the growth really is or could be over the near term and the long term for their investments. And it's really helping us. We've done deals in Iowa or Indiana or Michigan. There's demand for product all over the country, but my two are obviously Central and West Florida and the Midwest.
Fantastic. Now, why would an investor consider a net leased asset, especially in today's commercial real estate landscape? Now, what are the pros and cons?
We talk to investors all the time that are seeking a passive, diversified, stable income stream. And I think the asset class for single tenant net lease, it fit really well as a fixed income replacement for the last decade. Today there's other options for yield, very safe yield. So the yields need to come up, but I think overall with depreciation, with leverage, with credit, and long-term appreciation potential, net lease has probably one of the lower entry level points for investors to get into, similar to maybe your smaller apartments, 4-plexes, 5-plexes that people all get and understand. Net lease can be an easier barrier to entry for the professional, the doctor, the attorney, to find that diversification of income streams. So once again, that goes to our private client base, that we do work with entrepreneurs that are looking to diversify, business owners that are selling businesses, and you can't 1031 your business proceeds, but you can 1031 the real estate proceeds, get into cost segregation and things like that. So a variety of tools that we want to bring to the table to our clients, to not just say, here's a yield, here's 7% on a cap rate.
Yeah. And what does the current transaction landscape look like for net lease investments?
Tough. 8 straight quarters of cap rate increases according to recent research that came down. Very low transaction volume in Q1. We can say that all of it was relatively expected. We had a volatile Q1 with interest rates, the Fed talk, and things like that. I do expect this year to be a little more stable, but we're going to need more, stability in talks of interest rates. That's really it. Net lease is probably the most susceptible to interest rate movements, and it usually lags 6 to 9 months. Buyers adjust quickly, sellers take their time to adjust. So things of that nature are working themselves out, but we have a supply issue with a variety of Class A single tenant product that will need to be worked through over the next year or two potentially.
And what is your short and long-term outlook for this sector, and why?
Long-term, I'm bullish. We have 10,000 plus retirees a day. They're going to be looking for fixed income. Something about us real estate people, we just love buying more real estate. So we, when we talk to clients on a regular basis, it's not generally, are you selling the whole portfolio or doing this? Are we adjusting things accordingly? It might be time to get out of something older, get into something newer, something that's appreciated, deferred, things of that nature. So that goes back to the advisory and things like that. Really understanding what's happening in the marketplace comes from being in the marketplace regularly.
And what are the most significant changes you've noticed in the space, and which will have the most lasting impact as we head into the second half of 2024 and beyond that?
The biggest change, the biggest underlying metric is always interest rates. In this window, the short-term outlook versus that long-term outlook. Long-term, very bullish overall. Maybe not from a cap rate compression perspective, but definitely from yields for buyers and things like that. From a short-term perspective, I think it's a great time to buy. I think that prices have come down. There is real motivation in the marketplace for the right buyers that have the resumes. So there are deals still getting done. Our personal volume, because we've stayed in the business, is looking higher than it was last year at the same quarter, which is a little bit of a shift in the marketplace. So that gets me bullish. The conversations we're having in the marketplace, very bullish. But there are pockets of weakness all over the country. There is debt coming due. So very cautious time frame in the marketplace.
Now, what are your primary considerations as you advise clients through current economic conditions?
My primary consideration always stays in the focus of the client's end goal. Interest rates are up or down, doesn't matter. Cap rates are up or down, doesn't matter. Recession, no recession, growth, things of that nature, it really doesn't matter. If the client has to make a move, they have to make a move. I have to be there as an advisor throughout that process. So when the timing is right, we're prepared to jump from the moment they wake up and say, I need to do something. because we prepared all of these steps in the front end. We're outward in the marketplace with research. We're cooperating with vendors, brokers, service providers all over the country to ask about what they're seeing, right? Same as this discussion, our focus is to provide this information to our clients to help them make a better decision.
Now, do you have any surprising or controversial thoughts or hot takes about the current market happenings that you'd like to share?
I think I just said it. It's a great time to buy, right? When's the best time to buy real estate? 20 years ago or today. So to me, it's really, if you have conviction in the space, it is something you want to gain exposure to. It's been the best time to buy, I would say, probably since 2019 for real value and real opportunity to create value in the future. So, very bullish. We were lucky enough to close on another vehicle today for our own personal purchase. So this is how we're looking at the marketplace. We're there with our clients regularly.
Excellent. Well, to wrap up our conversation, we have a few rapid fire questions, words of advice that we'd love to get your answers to. Are you ready?
I think so.
All right. So if you were given $50 million today and had to invest it immediately, what would be your go-to asset type and location be, and why?
Ooh, that's a lot of detail in there. Okay, so first off, I'm probably going to go to 100 or 150 million. There's still decent debt out there if you're able to secure the right asset. My product type preference is going to be grocery, retail, preferably maybe something Publix or Kroger. And then on the flip side of that, industrial, kind of feed the retail. And that maybe apartments, something super class A. And I think for, generations and generations, you're pretty set for life there.
And are you doing that in Tampa? What markets are you looking at?
I love Tampa, but the insurance costs are very high. Tennessee's very attractive. Done a lot of business in Tennessee, love for the Midwest for us, where we do already own. So, geographically, just a great Sunbelt growth market that we see strong fundamentals in.
Fantastic. Now, what's your favorite tool or software you use on the job? And I promise this is not a trick question.
Okay, good, because I don't know if I already said Crexi 3 or 4 times, but I tried to make sure the plug was there, right? No, for me, the biggest thing has been the advancement of the cell phone. As a net lease specialist, the reason why I was able to make the move, grow a team, and do this really whenever I've traveled and been globally is because of a cell phone. You give me a cell phone, a Wi-Fi connection, cell signal, we're closing anytime, anywhere.
Excellent. And what is the most common misconception about your job or industry?
It's easy. It's easy. Easiest way to run a business or have a career. I see it all the time. My advice to brokers or anybody looking for this opportunity, it's a career. It's very difficult. The payoff is 7 days a week, 24/7, running your show. There's no breaks, whether you're around the world or not. And if you're willing to accept that, brokerage is a very rewarding life. But it's not just the paychecks and the deals closing. I had 10 people help me get ready for this just to make sure it turned out right. So it's a people business.
Yeah. Well, Darpan, thank you so much for joining us and sharing your insights. I know you're very busy, and we appreciate you spending time to sit down with us.
I really appreciate it, Yannis. Thank you.
Absolutely. And where can people find you online if they want to get in touch? Email, social media?
So I'm not the Twitter guy, but I'm on LinkedIn. So you can find me first name, last name on LinkedIn. Cell phone, office number, 513-878-7723. Just give me a call. Love talking about real estate 24/7.
Excellent. Well, thank you again. And thanks to everyone who tuned in today. If you enjoyed this episode, do not miss the next one. Visit Crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. Of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.